Sup traders, let's just have a look at some of the trades that I took yesterday on the 15th of October on the Tuesday. So going into the week, I was bearish. We had two bearish closes in a row, and we've got an objective, the sell side liquidity that price can come and take out. So let's just have a look at it. So Monday closed like this. We had a small doji candle, right? However, we had come into this support zone 50% level and found support and failed to close below multiple days in a row. 1 2 3 4 5 6 7 8 days in a row would fail to close below this candle. So obviously there is, price is failing to go lower, and there's liquidity building up here that price can potentially come and take out. So for me, I going into the day, especially in the morning after price had been put in these candles where it had a bearish engulfing candle, but this was followed by three bullish candles, followed by a bearish engulfing candle, and then we had this bullish engulfing candle, and that to me suggested, well, we might continue higher up, and where high I wasn't sure. I was thinking maybe we'll come up to previous week's high, or at least this high right here, because that's right below an imbalance, and find resistance there. So after seeing this candle in the morning, I switched my bias to bullish for a bit because of the fact that this candle is extremely bullish. We failed to, after taking these lows out, we have pushed up, tried to push down, and then continued pushing higher with the strong bullish engulfing candle. Trade number one I took was at this high, and this was a trade at 7 a.m. New York time, as a manipulation. Yeah, this is between 7 a.m. between 5 and 7, trading manipulation, anticipating essentially a pullback before price goes up to at least that CPI day high, and I was predicting maybe price will pull back into this fair value gap on the 60-minute time frame. However, we also had this order block on the 240 that price had already rejected, so it's just something to note. 240 order block right above that fair value gap, right? But I was predicting maybe we'll tap into this fair value gap, find support there, and then push up to the CPI day high. And the way price comes to this level and puts in this pattern where essentially a incomplete head and shoulder pattern. We have the left shoulder, we have the head, and we have the right shoulder, and then on the right shoulder we had a break below this, invert this fair value gap, and then I took an entry right there with stops above these highs and targets just to 1-to-1, and that was immediately, I took an entry right there with this, and that was immediately followed by a bullish engulfing candle. So we didn't really even get the 7 a.m. manipulation because price reaches that CPI high. That's trade one, immediate loss. Not the best point of interest to go short, even if it's for trade, even if I'm trading the manipulation before price moves up, right? Because there's no pattern for me. If there was a channel, then yeah, that makes it a better trade, but the point of interest is not the best because this was a quite an aggressive, or the point of interest was not the best. I only risked around 0.13% of my account, so this was a 0.1 minus 0.13, not even a whole 0.5%, mainly because I just wanted to get into the trade so I could journal it, because it's a pattern that I trade, and just so I can journal and try to avoid these trades in the future. And that was the main reason I took it with a really small risk. So after this candle, I took a long after price came into the CPI day high. I had just taken a loss on dollar CAD, which I think after taking that loss, I wanted to make the money back on pound dollar, and I was just looking for any kind of signs to trade, because what I got here was price rejected that high, right? We can get rid of this. This is not 240 order block. Rejected that high, which is where I was predicting price could potentially come up to after this candle, and I was also thinking it could potentially come up to this level because we had that imbalance right above that buy side liquidity. So after we got these two and the way price printed on the 240, took out this low during New York session. Right, on the 5 minutes it's clearer. Right, we take out this low, we consolidate sideways slightly, and I was predicting price to come up and take out these highs that was formed before the New York Open. And then we get this, and I entered trade number 2 around here, and I went long at the 50% mark. I had my stops, I believe, down here, and I had my targets up there. Unfortunately though, because the way price printed the next candle, I kind of took my trade off around somewhere around this low at a 50% loss, and yeah, that was unfortunate. And then I re-entered again somewhere around here. So trade number 3, I re-entered here, and again I exited that trade as well, and that was at a 0.5%, a 0.35% loss. So overall almost like 0.8, 0.9% loss. And then after that we get that move up to these highs, which is annoying. First of all, I shouldn't even be taking that trade because of where we are. We were trading at this high of the CPI candle liquidity. We are bearish for the week. It's Tuesday, most likely to make the high, the high of the week. And yeah, going long. Main reason was because of this bullish engulfing candle that took our liquidity below and above with this strong momentum, but it had already reached its objective, even though I thought its objective might be up at 1.31119 below the imbalance. But the first level of resistance was the main resistance zone, because it is also CPI day high. But ultimately we're bearish for the week, and I'm going long at a resistance zone, so it's just unacceptable trade. But yeah, bad trade. It just shouldn't be taking this trade, and I got out with, luckily, with only like 0.8% loss overall. And for trade number 3, I had a channel. I trade channels on the 15-minute time frame at a key level, 240 resistance zone, right, which is also the CPI day high, and to me that is a very, very good point of interest. I took, again here I was slightly early, I took 2 trades. One was on a different account that I took a trade where price did this. I believe I took a trade at this bearish engulfing candle with, I had my stops above a high at this 107 level. Remember, we're also at a psychological level of 1.31, right? That's pretty good level, which plays along with all the other confluences as well. And this trade I took and exited straight away, but not on my main account. It's on a different account, so I'm not really gonna consider that too much. But yeah, I saw this this is a prerequisite for a bearish engulfing pattern, the 3 candle pattern stick, the 3 candlestick pattern, a doji pin bar, loss of momentum candle followed by an opposite bullish, or opposite candle, and then the next one I anticipate to be a bearish engulfing candle, so which we get, and I entered after the second candle was printed, which is right there, was my entry. I stopped at the 7 level again, and I took my targets off there. Yeah, so I based my entry on the 5-minute time frame after this candle, anticipating that the 15-minute candle will be a bearish engulfing candle, and after seeing the bearish engulfing candle, I was a lot more confident that price is going to continue lower, and then we get a pullback into the 50% off this range, right, or the 618 right there, where I took another trade, and then I closed that second trade immediately, just as price came slightly down to this low in slight profit. And then after that, yeah, I was predicting price to come to this 60-minute fair value gap, which is where I took my targets. I risked slightly more than 1%, and this was around 2.6 R for me in total, and then price came down, pushed up again, right? This was one of the trades that I had to stay in drawdown. So yeah, price came down, and I was watching this low, hoping price would come down to that low and take out liquidity, but we come down to these lows, equal lows, and push up. And after seeing that, to me, I was like, man, that's it, I'm done. But I held the trade because it's a trade that I know quite well. Unlike the other trades I take that I don't really know, this is something I have traded enough times to understand that it could potentially play in my favor. And given all the other biases, higher time frame biases, it honestly didn't matter. That price was moving away in my direction into drawdown after being almost 1.5% in profit here. Yeah, it was like 1.7% on my account, and it was quite frustrating at first, but just knowing the play, I was more than happy to let it just move, can do its thing. Also, because on the 1 hour time frame, right, we have failed to close above multiple candles in a row, and also I was expecting a bearish engulfing candle again, like the 5 minute. I'm expecting a bearish engulfing candle on the 1 hour time frame where we had this high, a pin bar, and then this candle that is a bullish candle, and the next candle I'm anticipating to be a bearish engulfing candle if it plays. And the next candle was a bearish engulfing candle, which is, again, seeing that, honestly, it was relieving. To me, it seemed price was going to go down. And now I was just waiting for price to come and balance out this fair value gap, which it does pretty much immediately after, which is crazy. I could have even aimed for targets at the 50% of that fair value gap, which would have been a good trade. And again, now I wasn't sure where price was going to go. I know weekly time frame I was bearish going into the week, but just the way price has been approaching these highs, I wasn't sure. And honestly, the next day pound had CPI news coming out, and it's crazy that price takes out liquidity off this range below this fair value gap, and at bloody London open during CPI we dropped down to that low. Imagine that. That's pretty cool. They say also how liquidity is taken out, and that is absolutely crazy. But I'm still happy that I took out targets where I wanted to, because I wasn't sure if I could have sat through that, all of this. But yeah, just making weekly predictions and seeing it play out, it's pretty decent. So yeah, those are the trades I took on pound dollar. Had I just stuck to the bias that we're bearish for the week, I would have taken just that channel and maybe the first trade as well around these highs with a small loss, and just made like 2.5% rather than losing 0.8% along the way as well. So yeah, no, overall good day and good analysis. Yeah, look how nicely price rejected this with a bearish engulfing candle as well. But as price came into this order block, right, and we're putting this bullish engulfing candle, was something that kind of threw me off in the morning, and I was like, oh, maybe we're going to continue higher up, but the CPI candle has just dropped itself. And right now I do expect maybe we'll see something like this and then come back up to take out this previous week's high, because this channel, we have a nice channel here that could potentially play out in the favor of a bullish momentum. So let's see how that plays out.